Hello, today is the 18th of July 2011. Welcome to the second video for today. I want to start off by pointing out that on the blog I put up a 60-second quick little entertainment style video, but it's not available on this channel. It is available on the blog. Start this off with volatility. It is declining now, or lower than its previous high, showing what looks like a descending triangle sort of formation. Within this chart, we've already had the trend changeover. Now we're coming back. This lower moving average, or the one that was resistance before, can now possibly be support. I think this is also a good tool to show how market dynamics work, see if this area becomes support, and then break this resistance line, and then you might be off to the races, or will have high volatility on the silver market. But it's in a downtrend right now, only short term. And silver, on the other hand, is also in a downtrend short term too, because over the last few minutes, we've seen silver dip all the way down to $40 and a dime, which is down well over 1% from its high today, which was a 2.5-month high. And we'll take a look at this trend line once again. But what I want to do is I want to shorten out the candle. So I'm just going to eliminate everything that's not needed. And this is the trend, or this is a price action. And I want to draw a trend channel, but I want to connect as many of these key points that I can. If I do the exact top, this is a good trend. However, the problem within this is that it doesn't connect as many of the key tops. By just moving it a little bit lower, it connects more of these points in here, and it connects this point even a little bit better. Okay, so that's the resistance line. For support, I want to do the same thing again. I want to connect as many of the key points. If I do the exact bottom, then I only get one hit. If I can move it just a little bit like this, then I get the two different levels of support. Now I can draw the parallel lines, and with less candles, I can get a more accurate reading, or I can at least see it much more clearly. And there's the straight parallel line, and we'll match it up, and it hit resistance. Okay, now what? Well, this is an area where you would normally expect the market to be resisted, meaning go sideways, correct through time, or go lower, correct through price. When you're looking for resistance levels, you got this trend line, and you got this resistance level. If they meet up at some same point, it would be roughly around here. And if this area is not resistance, then it's doing what it's not supposed to do. And I say that in a sense that creates a failed move, because a failure to be resistance can oftentimes create a fast move in the opposite direction, and that would be most likely to this trend in here. Where would this be right now? Well, it's pretty much over 43 right now, so that would be a decent sized move towards the upside, but that's only if it breaks it. It's only touched it once, and now, like we said again, we got the support level. The biggest one in the long term is going to be the 3811 mark, which represents somewhere in here. That's the biggest one, because that's the Fibonacci from the May highs and the crash lows. And that will be it for today's video. And remember to check out that video on the blog, and have yourself a magnificent day. Bye-bye.